Hi guys, and welcome to China Perspective. My name is 𝗕𝗵𝗶𝗹𝗃, and you may know me as the German recruiter in Asia. Money makes the world go round, and the kind of currency we're using creates strengths and weaknesses for countries. Today, I want to be speaking about a new kind of currency, the digital yuan. While most countries are still debating digital currencies, China is already using one, increasingly at scale. That means that the digital yuan is live already. To use it is fast, it's strategic, and in the West it is still flying under the radar. And today we're breaking it down. What exactly is the digital yuan? Why did China build it? And what are the very legitimate concerns against it? Where is it being used now? And what does it all mean for the future of the US dollar, for Europe, and for global businesses? So let's start simple. What is the digital yuan? The digital yuan is a central bank digital currency issued by the People's Bank of China. This bank is the central bank of the People's Republic of China. The digital yuan is a one-on-one digital version of the RMB, fully backed by the Chinese state. It is not decentralized. It also isn't crypto. Crypto trading is actually officially banned in China, and digital tokens are not recognized as legal tenders or assets here. The main reason, what I've heard, is that it cannot be controlled by the government. The digital yuan, however, is programmable. Government-issued money, and it's already accepted here in taxis, retail shops, public transport, and trade hubs in the country. You can spend it with your phone via e-wallets, or you scan QR codes at markets and metro stations. Given that most of us do not carry cash anymore, I personally have the same 100 RMB, that's about 10-12 US dollar, in my pocket since, I believe, before the pandemic. The actual user applications are huge. Even if we see beggars on the street here, which is actually not a very common sight here, and they tend to be only around the mass tourist location, they all carry laminated signs around their neck which shows a QR code a person can scan and send them digital money. And if you're a company doing business in China, you might already be using it, even if you don't know. So the potential application aside, how big is it now? By early this year, 2025, China's digital yuan has processed over 7 trillion RMB, that's close to 1 trillion US dollars. And even though that sounds like a pretty big number, given the size of the Chinese economy, it actually accounts for just roughly 0.16% of China's total monetary volume. It's active in over 17 major cities, embedded in public services, and used by around 260 million people. To put that in perspective for you, Western Europe has around 200 million people, which means there are less people in Western Europe than there are people using the digital yuan today. What I'm trying to say is that even if you've never heard about it, this is not, a cute little thing. This is not longer a trial. It's already infrastructure. And so why did China build it? Well, there are 4 main reasons behind this digital push. Number 1, control. China doesn't want its economy tied to the US dollar system, especially when sanctions and global tensions are in play. Putting yourself into China's shoes, especially this year, I think we can all understand that this is a quite sensible concern. Number 2 is efficiency. The digital yuan's payments settle in seconds without a middleman or correspondent banks. That's a big leap for global logistics and trade. China likes to do everything very fast. We also call it China speed. Number 3 is resilience. If you are Argentina, for example, or another country, and you run out of dollars, the digital yuan gives you another option, and that's already happening. In fact, Argentina is using yuan to repay its IMF debt, but so far only limited and to try it out. But they did renew a currency swap with China last year in 2024. Money is a political tool. And number 4, strategic leadership. While others talk, China is building. It wants to set the rules of digital finance, not follow them. China's vision for the next 10 years until 2035 is to set, influence, and dominate global standards. I made a video about this, comparing China 2025 and China 2035, which I'm linking for you below in the comments. Let's look at how it works. What is the engine behind the digital yuan? Behind the scenes is CIPS, the cross-border interbank payment system. It's China's answer to SWIFT. Unlike SWIFT, which just sends messages, CIPS settles money. real transactions in real time in RMB. It now links over 1,400 institutions across 110 countries, some of the larger banks, some HSBC, Deutsche Bank, BNP Paribas, and Standard Chartered. These are neither small nor unimportant players in the market. And now that it's integrated with the digital yuan, cross-border settlements don't just happen, they happen instantly. If you want the deep dive on CIPS, check out my full video. But here's what basically happens. China has built its own financial rails and the train is already running. So between CIPS and the digital yuan, you can see that China really has a plan. That leaves us to which countries are most open to using the digital yuan. Let's talk real world usage. Some countries are more open than others to using it, which I think will not surprise anyone. It's the same as it will not surprise anyone to see that those countries who are early adopters tend to not be Western countries, but hail from the so-called global south, or for example have a BRICS background. Saudi Arabia is another example. It's one of the world's largest oil exporters and is reportedly in talks to accept the yuan for crude oil. Not tomorrow, now. Brazil, the largest economy in Latin America, is deepening RMB trade ties and participating in cross-border digital currency pilots with China. This is all early stages, but could pave the way for bigger exchanges in the future as China ties with South America grow. And along the Belt and Road, the e-yuan is being used to pay contractors in ports, rail projects and energy deals from Mombasa to Lahore to Laos. However, at the moment, the usage to the digital yuan is still only a small fraction of the total trading value. That also means that China puts their economic power behind it. There's a lot of room for improvement. And here's a major trade shift. In 2024, ASEAN officially surpassed the European Union as China's largest trading partner, with over 975 billion US in two-way trade. A growing share of that is now settled in yuan, not in US dollars anymore. RMB settlement shares are growing, but they're also not dominant yet. While all of these regions are only in the beginning of implementing usage of the digital yuan, I would expect this to increase in the near future. They are major, globally integrated markets, and they're increasingly operating on China's terms as China positions itself as a reliable and non-dramatic trading partner. So what makes the digital yuan appealing to use? For one, speed. Payments settle in seconds. Also, cost. Pilots test cut transaction fees by up to 98%. There are no foreign exchange conversions, no middlemen, no dollar clearing. And most importantly, programmability. Payments can be conditional, traceable, or even expired if unused. So let's pause here for a second, because programmability is a huge game changer. In cities like Suzhou and Chengdu, digital stimulus payments were given out that expired after a week if unused, designed to boost local consumption quickly. Also here in Shanghai, actually, citizens were able to receive a payment voucher for restaurants that they had to use within a week or so. And so there were a lot of critics, especially foreign ones, that said the total stimulus package was not enough. I still think it's remarkable. Targeted spending within one region or city, within one industry, so in this case it was restaurant and food industry, and within a very tight time frame. From an economic stimulus point of view, I think this is significant. And also we have to know Chinese households in general have a very, very high saving rate. The average Chinese consumer is not in debt or living off consumer credit, like in some other countries. Individuals here and households save a significant portion of their income, of course only if they can. And if they do, they tend to invest the rest. A lot of it is going into real estate. If just given a cash handout, the absolute large majority of households would put it into their saving account or below, their mattress, but not spend it. By giving out time-limited digital payments, the government made sure that the money ended up being used and put into the real economy. The government can code money to only work in certain districts or stores or sectors. That's stimulus with built-in policy controls. These features, however, right now are experimental and localized. But if the results are good, I can really see this spreading out. So pretty cool, huh? But now let's take this idea global. Under the Belt and Road Initiative, more than a dozen countries are exploring sovereign debt agreements where repayments are linked to projects, milestones via smart contracts. While those at the moment are only an emerging concept and not widespread, they're an interesting idea that would be attractive to a lender, right? That means China isn't just lending money, it's controlling how and when that money gets repaid and ensuring its contractors, often Chinese state companies, get paid first. It's digital leverage embedded in infrastructure. So let's compare the digital yuan to the digital euro and the digital US dollar. So how does they stack up against what Europe is doing and what the US are doing? The digital euro is still very, very much in pilot stage. It's expected no sooner than 2026 or 7 with strong privacy limits and limited programmability. Safe? Yes. Fast? No. You know, I'm European. I'm very, very grateful to be European, but oh boy, we are not the fastest. The FedNow system launched in 2023 comes from the US, but it's actually not a digital dollar. It just lets US banks settle payments instantly, but it's not designed for cross-border trade. So it's helpful domestically, but I don't think it will have such a big impact on international trade. So in short, China is way ahead, especially on cross-border settlement, real-world usage, and programmable infrastructure. What does this all mean for global businesses? So if you are a Western manufacturer supplying components to Chinese firms, expect to see RMB denominated invoices coming up more frequently in the future. If you operate in Asia, you may be asked to settle in digital yuan in Southeast Asia, the Middle East, or even in Africa. And if geopolitical tensions escalate, you might find yourself cut off from SWIFT or dollar clearing to pay your Chinese client or supplier. But then you can fall back on the digital yuan or the CIPS system. That's 2025 business risk management. We live in transformative times, and no matter what you and I think about geopolitics on a personal level, if you have a firm that operates globally, it would be wise to have a plan B to make sure you can continue your normal business operations if things do go south. But of course, it's not all upside. There are some very serious risks and very valid concerns that also need to be addressed. For one, surveillance is real. Every digital yuan transaction is visible to China's central bank. This is, in my opinion, the worst point. Everything you do is transparent. If the government will do anything with that information, I have no idea, right? But the thought is very unsettling. The Chinese yuan isn't fully convertible, and that's still a big hurdle for trust. China maintains a fairly tight grip on exchange rate and trade of its currency. Dependency risk is also growing. The more you use Chinese rails, the more you live inside China's system with everything that entails, including a heavily government-regulated reality. So while yes, there are many advantages to the digital yuan, the risks are considerable and need to be spoken about as well. Now to the big question, drama. What does this mean for the US dollar? Short answer, the dollar is not fading, but it's being hedged again. As 𝗂𝗵𝗶𝗋, who is an economist for both advanced economies and emerging markets, said, countries aren't abandoning the US dollar, they are insuring against it. That statement really resonated with me. And China is in part selling that insurance to itself and to many other regions of this world who find themselves concerned. In early 2025, Chinese yuan usage surpassed the euro in some south-to-south trade, and BRICS countries are testing shared payment systems. Belt and Road settlements are quietly shifting away from the US dollar. This isn't a de-dollarization through revolution. It's more of a fragmentation through innovation. So what does all of this mean? The digital yuan isn't just a currency. It's a strategic lever for trade, for influence, and for control. It offers speed, efficiency, and new tools for governments, but also raises questions about privacy, about trust, and dependency. It's still early, but it's real and it's growing. Guys, if you liked this video, please like and subscribe. It really helps my channel grow and it would mean a lot to me. Let me know your comments below about your opinions. Do you think the digital yuan will reshape global finances, or will trust and convertibility issues keep it in China's corner? Thanks, guys. Bye.